You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, hello once again from Sprott Money News and SprottMoney.com. It is Friday, August the 3rd, 2018, and this is your Weekly Wrap-Up. I'm your host, Craig Hemke, and joining us as usual this week is Eric Sprott. Eric, good morning.
Craig, good morning. Lots going on, lots of earnings releases and lots going on in the markets and the economy and the tweets and whatever, so let's get at them.
Yeah, we got to take what we can get, no doubt about it. And we're going to talk a lot about prices today, and maybe there'll be a rally on the way. And that perhaps means it's a good time to start stacking again. If you are in the business of looking for some silver, we've got a deal for you. Head over to SprottMoney.com, or you can call 888-861-0775, and you can purchase a 1-ounce Sprott-branded silver round for just 79 cents over spot. This bar features the renowned Sprott name, that's your name, my friend, as well as the iconic Canadian maple leaf. With its 99.9% purity, it's ideal for both investing and collecting. Again, just 79 cents over spot. It's a pretty good deal.
I happen to own quite a few of those, Craig.
I would imagine you do. It's got your name on them. So they...
I had a deal where I had a bunch of silver bars, and some guy said, well, we could convert those to coins at a pretty good price. And I said, fine, go for it. So you never know. I might even have like 1 million of those or some such number.
I like that. And the fact, if anybody says, whose are they, was what it says Sprott on them right here. So clearly they're mine. So.
Hey, that's my coin.
That's right. Just like your crayon box.
Yeah, right.
All right, my friend. Today we had the economic news of the day was the employment report here in the U.S. The absolute number of jobs came in below what were expected. But two little points I want to share with everybody and that won't get mentioned much, and I want to get your reaction, Eric. One, real wage growth, which is wage growth adjusted for inflation, was the worst we've seen in 6 years, going back to July 2012. And perhaps even more concerning, the amount of Americans holding multiple jobs, okay? They make it sound like everybody's got a full-time job with benefits. No, a lot of folks are working 2 or 3 jobs just trying to get by. The amount of Americans holding multiple jobs, highest since 1999. Probably won't hear that much in the media, Eric, so I thought I would point that out to you.
And it's the same theme that we've discussed, okay? I mean, we all know that the CPI is understated. I mean, and it's so massively understated. Just deal with healthcare and insurance and realty taxes and the gasoline price, whatever, education. There's no way that CPI is 2%, but the government wants us to believe it, and so we can all say, all the economists can say, well, everyone's doing well. Well, we very well know that, no, there's some people that are doing well, the 1%, and there's some that are not doing well, commonly known as flyover America. And it gets tougher as these price increases come through. And, of course, now we have this stupid trade war where costs of things are going to go up. So the government's going to earn the tariff, and we the 99%, are going to pay the tariff in terms of increased prices. So we got to expect more difficulty for the man in the street here. It's not nearly as good. And even the hours worked this week were down 0.1 hours. So that's not good. That's just less salary. So it's been the same old thing. I think the data's always been wrong. Even the GDP data is always wrong when they tell us it's 4% growth. It's baloney. They always revise it later to some lower number. And anyway, I just don't believe in the recovery is nearly as strong as the press and the economists would like us to believe.
Now, despite that, we had an in-between meeting of the FOMC this week. It sure made it sound like they're going to hike rates next month in September, and they're going to hike the Fed funds rate again in December. That may very well drive the 2-year note north of 3% and invert the yield curve. Are we going to be talking about cutting rates and more QE in 2019, Eric?
Well, there's no doubt that higher rates slow things down. I mean, who's kidding who? We already see it in housing. We see in car sales, which are very, very both interest rate related. It's going to start affecting even people that have margin accounts, where all of a sudden, you're now paying 1.5% more in your margin. You might think, well, maybe I should reduce that margin, sell some stock just so I don't have to pay the 3 or 4% interest. These things cost people money. It's going to cost the government money. I mean, here we're looking at deficits that are pushing towards $1 trillion. and the rate of interest they have to pay is going up. So you could get into a vicious circle here, where as rates go up, the deficit goes up. As the deficit goes up, the rates go up. So it's all not good. Yet the market seems to take it in stride so far. But there are cracks happening. You see cracks happening in like the Facebook story and the housing stocks and other areas that have suffered here. Like it's not clear sailing for everybody. So I would, as you would advise people to be very careful on assuming that things are as great as they are and that the market will continue to rise like it has.
Okay, so Eric, it's been a pretty tough 100 days or so. You, I, everybody else listening to this call knows that this has been no fun at all, as gold has fallen from about $1,360 down to $1,210. Made new lows, new closing lows this week for all of this year, actually going back to about last year at this time. Silver as well. A lot of the mining share indices broke down as well, but now they're trying to reverse a little bit today. In fact, gold and silver are actually both up fractionally on the week, if you can believe that. Yep. All right, we're all kind of hoping for a turnaround. How do you feel?
Well, we're set up for it. As you know, the physical market seems to have no bearing on price, and it's all based on what goes on at COMEX. We've seen this total reversal of the commercials who had a big short position have now covered the position they're long. The technical funds are short, so it's time to go the other way. The sentiment in gold is almost at a record low, and we've come off bases like this before. We've had very substantive rallies, like in the $200 to $300 in the price of gold. And of course, that could change things dramatically for the companies. And it just, some of these companies that have, higher costs, like $1,100, and the price is $1,200, there's not much to work with there. But you throw a couple of $100 on there, and the earnings triple. So it could be quite good for them. I happen to believe that. Well, I think the physical demand is pretty solid in here. We've seen the numbers from India, where their purchases in the first 6 months of this year, their last 6 months, because of June year end, we're up 24%. I mean, they consumed almost 1,000 tons for the full year, their full year, which ends June 30th. So their demand is strong. We got lots of buying by people like Russia and Kazakhstan and Turkey and Iran now. We'll probably get some buying by people in China with the currency rallying here, because the Bank of China wants the currency to rally. Maybe people will now use that to, in turn, own some gold if the U.S. dollar is going to. If the other way of protecting yourself is the U.S. dollar, it starts going down, you might want to own gold. And, your work that you've done on the yuan gold price has been very accurate. And, of course, we've had this change overnight where the People's Bank of China has increased margin on foreign currency transactions, and it caused the yuan to shoot up here. So that's had, I think, a very important effect on gold as we speak, which is up around $10 on the day.
Yeah, and hopefully that's the start of a new trend if we can get the yuan to stop weakening. But if I were to tell you this, Eric, I mean, and just to kind of explain to everybody that doesn't watch these kind of things, if I were to tell you that the large speculator category in gold, their short position was at an all-time high, and if I were to tell you that the large speculator category in COMEX silver, that their short position was also at an all-time high, what would you normally think would happen next?
Normally, the commercial banks would obliterate them, and the prices would rally. I mean, that's the game. Every time I hear a bank president talk about we need volatility in the market, and you think, we need volatility. Well, what are you telling me? If something goes down a lot, you make money. If something goes up a lot, you make money. How do you do that? Oh, that's what you do. You take advantage of somebody who's on the losing end of that transaction. Okay, now I got it. Which is exactly what happens here. The banks get the guys to go short, then they run it up. Yeah. And then, as they're running it up, they'll reshort the thing again and, wash, rinse, repeat. So here we go. But we're in very good position for that to happen here.
Well, let's finish on a bright note, Eric. We mentioned in large balance, the shares having a tough week. You talked last week about some of the major producers and how lousy their earnings had been. However, there were some interesting upticks this week. One of your companies, where your chairman in Kirkland Lake, had a very good earnings report, and it is at all-time highs as we speak, but also had some upticks this week at some of those Pilbara stocks, too. Anything you can add to the picture?
Well, I can't really add anything to the earnings release that Kirkland had, which was good. I think the earnings were up 20% quarter over quarter, and the cash flow was good, and the exploration is good, and the possibility of finding big things at Fosterville and Macassa, for that matter, seems to be quite okay. In the case of the Pilbara stocks, there was a conference called Gold 18 at Perth, and if somebody puts that in, Gold 18 at Perth, there were a bunch of speakers, very educated speakers, highbrow PhDs, talking about all sorts of things related to gold. They're very difficult to read. But there were a number of speakers. Quinton Henning, the president of, or CEO of, or chairman, I should say, of Nova, spoke. But there were other speakers who were with, I think one was with the Western Australia Government Geology Department. Another one was an expert from New Zealand, explaining how the gold is deposed down in Australia, and they kept referring to basin-wide. And of course, that's the whole thesis here. Is this thing going to be basin-wide, and is it going to be like the Witwatersrand Basin? And, we keep getting good results from people throughout the basin, whether it's 250 miles south or kilometers, or 150 kilometers over to the east, and some guys finding the same stuff as we found over here. So I think the thesis is kind of holding together. So it looks, and the stock's perking up here. I think the interest is coming back into the basin play. So a lot of the stocks are doing well.
A fun story to follow, no doubt about that. And it was a hot story, I guess, last fall? Kind of cooled off here for a while, and now maybe it's time for interest to perk up again. I know there's a number of names down there that we've discussed. I think a lot of folks, if they just do their own due diligence, they can figure out if that's something that they want to be a part of.
Yeah, and I would suggest if they go to this website, Gold 18 at Perth, there's lots of interesting articles there that I'm not a geologist, but I get the sense of the budding interest in the whole big picture play, which I think is what will move the whole group in the Pilbara. So it's worth trying to get up to speed on. Yep,
no doubt. All right, Eric, before we go, I just have an announcement from Sprott Money that we have a special for storage clients this week. Here in the month of August, the folks at Sprott Money have struck a 10-ounce PAMP gold bar. And you can get that baby for just $19 over spot. That's a really good deal. If you aren't already a storage client, you can also take advantage of this deal, though. You can just simply open a Sprott Money storage account, and you'll get access to this exclusive offer. Now, Canadian listeners need to visit SprottMoney.com. Open a storage account today. Again, 10-ounce gold bar for just $19 over spot. And as we mentioned earlier, we got the 1-ounce Sprott silver rounds for just 80 cents over spot. Look, prices are going to turn higher at some point. They're not just going to zero. So this is a pretty good time to be stacking. Hopefully, Eric will kind of take today's positive momentum and turn it into next week and give us something positive to talk about it come next Friday.
Well, there's certainly some fun out there. And, of course, if you do your own special work, it's funny that as I'm sitting here looking at Kirkland Lake at a new high, which has happened very often. I mean, there are opportunities in the precious metal space. It just takes a little bit of legwork to get there. So let's hope that now we get the benefit of the metals prices moving up and making it a lot easier for all of us to partake in this.
That would sure be nice. Well, all right, my friend, thank you for your time today. It's always so informative to hear you speak, and I look forward to talking to you again next Friday.
Okay, Craig, all the best.
And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening. Have a great weekend.